House prices are set to drop in Sydney, Melbourne and Canberra over the next financial year, according to a new report from Domain. The data shows house values could drop by up to 7% in Sydney and 8% in Melbourne. To break down the figures, we're joined by Danushi Dias in Melbourne for us. Danushi, hi there. What does the report then actually set out?
Good morning. Well, according to Domain, over the next year, a house in Sydney could lose more than $120,000 in value. In Melbourne, with that forecast of up to 8% in price drops, that could mean that the median house value of in Melbourne actually falls below the $1 million mark, which it has been sitting on for quite some time. It also forecasts some downward pressure in Canberra, with house prices expected to drop by about $40,000. The interesting thing in this data is that it shows that unit prices could actually outperform house prices. Domain says that's because people are not as able to borrow much money with the recent rate rises, so they're looking to get into the market through units instead of houses. But on the flip side of this, not all markets are doing badly. So in Perth, house prices are forecast to grow by about 5%. Brisbane and Adelaide as well expected to grow by about 3 to 4%. Domain says that's due to a number of things. The population is growing in these markets and the supply is down there.
Why is it happening, Danushi?
Well, there are a number of factors at play here. An economist from Domain says that in addition to those recent rate rises, tax policy could also be having an influence. And that includes the changes to the capital gains tax discount as well as negative gearing. Now, the federal government has been quick to shut down this report, saying that its figures don't reflect what Treasury has forecast for the year ahead. Here's Minister Jason Clare.
That's not the forecast from Treasury. So, I'd view that with, a bit of a healthy dose of scepticism. The advice from Treasury is that house prices will continue to grow, but in a sustainable way. The challenge that we have as a country here is that prices have grown in an exponential way. It's why we say the system's broken at the moment.
It is worth noting that this new data from Domain seems to mirror what we saw from Cotality just a month ago. Its figures found that house prices around the country had flatlined for the first time since January last year. Some are concerned that even with these price drops, affordability remains an issue. And then when you tap that on to other pressures, it means that the housing market could continue to weaken. We spoke to an independent property expert, Cameron Kusher, and here's what he had to say.
We've obviously had 3 interest rate increases so far this year, and this is exacerbating the slowdown in the housing market. And then the federal budget announced some significant changes around borrowing to investors. And that's probably not showing up too much in the data as such yet, but it's certainly weighing on sentiment and is likely to lead to weaker housing market conditions going forward as well.
Another interesting point that Mr. Kusher raises is that when house prices drop like this, it can have an effect on how much people are willing to spend. They see their house price going down and then they tighten up their budgets, which can then put further pressure on the economy. So we'll wait and see whether Domain's forecast actually plays out over the next 12 months.